guys. Today is Friday, April 3rd, 2014. 15, sorry about that. And it is Good Friday. So the stock markets are closed. But I just wanted to do a quick video for you guys to talk about something that came up in the chat room yesterday. So we were talking about fundamental analysis versus technical analysis. And I often say that when the two work together, that is the most powerful strategy that you can have. But that I always use technical analysis first, above and beyond fundamental analysis. And the reason for that is that fundamental analysis requires a lot more subjective analysis and a lot more subjective thinking. If you watch or listen to or read the fundamental analysts' reports on various companies and various earnings reports, they have very different views from one another, even though they could be creating the same models or looking at the same models. How they analyze those models, those financial models, and determine what the value of a company is or forecast what the future business of a company is going to be differs greatly depending on a lot of personal, subjective things. So obviously, I know a little bit about fundamental analysis. I've done some fundamental analysis. I'm married to a fundamental analyst, and he's one of the best fundamental analysts I've ever seen. He tends to be right most of the time, but he's right eventually. Rarely does a fundamental analyst able to tell you what a stock is going to do tomorrow. Whereas technical analysis has a bit better clue of what's going on in the stock right now. So the specific thing that was brought up was this Apple earnings day on January 27th was the day before, or the day of earnings, and that afternoon after market close, Apple announced its earnings. And as you can see here, this is a very bearish chart pattern. It was going sideways. It put in a doji up here at the top and made it into an evening star by gapping down and then giving a very bearish candle. So this was going into earnings. For whatever reason, analysts were bearish going into earnings. This did not happen because technical analysis suggested it should be so. This happened because the analysts at the time did not believe that Apple was going to have blowout earnings. They didn't think they were going to have great numbers. So that's the reason that this came down that day, was because of fundamental analysis. So certainly there were some people, Carl Icahn, for example, who's very famous, who believed enough in Apple to say, I disagree with the majority of analysts out there. I have my own fundamental ideas about Apple, and I'm going to go ahead and get this long into earnings. And then they did very well. Obviously, they blew out earnings, as you can see by the reaction. And the next day, it popped up. This is called a kicker signal. So the argument was, oh, see, you should have bought, if you had bought on the 27th because of fundamental analysis, you would have done very well. Sometimes fundamental analysis works better than technical analysis. But I still need to disagree, because as traders, it's not our job to buy the bottom. It's our job to get the best odds. So in this case, obviously this did not have good odds to buy this into earnings for several reasons. One is that whenever you buy into earnings, you just really don't know what the stock is going to do. Even if you think you understand what the report's going to be, even if you're right about what the report's going to be, you still don't know what the reaction to that report's going to be. So I think that we can see that here, because clearly the analysts were generally bearish. So if you were coming into Apple here based on the majority of fundamental analysis, you would have been short. And you would have been very badly hurt by this earnings, because you would have been wrong. If you had taken a fundamental analysis approach that was contrary to the majority, sure, you would have done well. You would have got lucky. But it would have been luck. However, using technical analysis, this candle here is a kicker signal. That's telling you, you know what? It's coming off of a downtrend. It's kicking off. It's going to go higher. So as a technical analyst, I would have bought this. I didn't, because I wasn't really paying attention, or I don't really know what the reason was that I didn't do it. I wasn't watching this at the time. But had I been using technical analysis to trade Apple, I would have bought it on the day after the earnings when it did this kicker signal. And look at how right I would have been. All the way up to here, and then I would have sold it here when it started to go sideways. Or maybe I would have decided to look at a weekly chart and hold it for much longer. But the point is that buying this using technical analysis here and riding it up had much better odds than buying it here and being contrary to both technical and fundamental analysis. So that's my argument about fundamental versus technical analysis for today. I hope that helped enlighten some of you as to what I was trying to say about this yesterday, and I hope that makes sense for all of you. Again, just want to point out, it's not our job to catch bottoms, it's our job to get the best odds. And the best odds in this trade would have been to buy it on the kicker signal. And that would have had both technical and fundamental analysis backing up that trade, and it would have worked beautifully. Okay, that's it. Happy Good Friday to you all. Happy Easter coming up. Happy Passover to those of you who celebrate Passover, and to all the atheists out there, good luck. Have a great day. Bye-bye.